diving into both traditional banks and also kind of the future of where crypto lending is really the topic today. My name is Paul Barron. Welcome back to TechPath. Joining me today is Alex Mashinsky of Celsius, and Alex has been on the show many times. Great to have you back, man.
Hi, Paul. Thanks for having me again.
Yeah, excellent. A lot has happened since we had you back here on the show over the past few months. Obviously, we've seen tremendous movement in crypto lending, big movement as we've seen in the market, which has opened up a lot of opportunity for crypto lending. Talk to me a little bit about where Celsius is today in terms of product, roadmap, kind of the future of where you guys are going.
Sure. Yeah, we a year ago we were at about $1 billion in assets. We just crossed 25 billion. So it's tremendous growth. Customers are now over 1.1 million customers worldwide. And the reason there's such demand for Celsius is because basically we paid over $860 million in yield to the community, which is probably more than some of the largest banks in the world. So the fact that Celsius can continue to deliver very stable yield and loans, low-cost loans, attract customers to basically unbank themselves, switch away from traditional finance and hodl. You know, that's what it's all about, right? It's if you hodl for the last year, you've done very well.
Yeah, for sure. Alex, when you look at the growth of certain countries, whether it's here in the United States, any of the European countries, South America, has there been any one market that has stood out to you that you've seen both the consumers and maybe also some of, whether it's businesses, institutions, family offices, that have started to really make a tidal shift in moving to this kind of model?
Yeah, so obviously this, for the last few years, there's been a retail-driven adoption. You know, it started more in Asia, then it came to the United States. Now it's really, Europe is picking up. At Celsius, about 45% of the users are in Europe. Another 35% are in the United States, and the rest are all over the world. I think institutions, family office are joining now. They're just dipping their toes into crypto. They're just getting their allocations. And that's why you're seeing higher and higher lows, right, for Bitcoin. So even when Bitcoin takes a hit, you see that basically there's tremendous support. You know, on my Twitter, I called the 29,000 level a few months ago because I believe that we're not going to go lower than that. And I think now we're probably at the 40,000 level. You're not going to go below 40,000 even if bad news show up.
Yeah. So your plan here with Celsius, obviously the retail investor has been a big part of kind of the growth model. Your expansive growth over the past year, was almost 20x, I think, is where you're currently standing. When you look at the next 2 to 3 years, which is where we could see a bear cycle come back in, we also see institutional ETFs making a play, family offices, a lot more structured capital moving into the space. The likelihood of potential opportunity for you guys in terms of just crypto lending overall is really going to increase dramatically. Do you feel like that is going to be something that you could 20x again? Where do you think the growth is over the next, say, couple to 3 years?
So again, 90% of our community comes to Celsius for the yield. I know reporters call our companies lending companies, but really you should be calling us yield companies. Again,
Sure.
The closest competitor to Celsius paid something like $50 million in yield. So we are a 15x bigger, or we pay 15 times more than anyone else in crypto, any DeFi, any CeFi, and so on. So the borrowing or the loan part is a good part because being able to defer your taxes and taking a loan instead of selling your Bitcoin has been a very good and sophisticated strategy. But like I said, 90% of our customers just want to earn 6.2% on their Bitcoin, or 8.8% on their stablecoin, or 5.5% on their Ether. And while they're hodling, right, while they're waiting for these assets to appreciate in value, they're earning extra yield without having to do anything, right? Every Monday they get a distribution, and it's a win for them, it's a win for us.
For sure. Alex, talk to me about the I guess the bank ecosystem as it is right now, we've had Vast Bank on the show here. They've talked about kind of their evolution of it. But one thing they did not mention was the yield components, which I think a lot of structured, banking systems in general, this really changes the game for them in terms of what their customers are going to be expecting, especially crypto customers, crypto investors, in terms of yields. Do you feel like the banks can ever truly make the leap into some of these higher and more attractive yield models?
So look, most banks are public companies, and you can go to their filings and see how much money they make. JP Morgan last quarter made $20 billion in net income. Right. So the issue is not that they don't know how to create yield. They make tremendous amount of yield. They just choose to give 100% of that, almost 100% of that, to their shareholders. And Celsius chooses to create the same yield and give a very large chunk of that to its customers. So the issue is really not about banks don't know how to create yield. Banks are phenomenal at creating profits. They just don't want to share it with their customers. And the question is, are banks going to change their behavior because they're seeing so many customers leaving the banking system, right? So the real issue is that the banks run to regulators and cry and say, oh, all these new crypto companies are stealing our customers, are stealing our assets, shut them down. Really, all the regulators have to say back is, hey, you have to do more for your customers. You want to retain those customers? Don't ask us for regulation. Go and do more for your customers.
Well, I think you hit on something that is big. We've been tracking the movement of individual, especially the retail consumers, is in the crypto space that are starting to move a lot of their main asset lines into companies like Celsius, the Voyagers, the et cetera, that have kind of moved into this space of higher yields. And also, some of the tool sets that you need to essentially kind of unbank someone or at least pull them away from traditional finance. When you see the movement, Rich, right now it's still somewhat, I would say, somewhat slow. I wouldn't say slow. I mean, it's just got a lot of room for growth. But when you look at the capacity of the percentage of banking customers out there that could be entering into the crypto space in the next 12 to 24 months, the likelihood is we're going to see a big onslaught of new retail customers moving into that space. Do you feel like this is the golden age for truly getting people away from traditional banking and into platforms like Celsius?
Yeah, look, I think finally banks have real competition. The reason there is competition is because we don't have to use the banking rails. We can use a new set of rails that relies on open ledger, blockchain, right? Open architecture systems that basically bypass these toll collectors. So, and now the competition is about who does the best job for the customers. So, right. And in a fair market where basically companies like Celsius pay 15 to 20 times more than the bank pays you, you have to ask yourself, who's telling you the truth, who's paying you fair value, and who is basically trying to get away with giving you nothing for your money.
Yeah. So Alex, there's been several states here in the U.S. that have started to move in general on companies that are, one, paying yields, some of the different crypto lending opportunities there, Texas being one, Alabama, et cetera. What are your thoughts and what's your current situation with some of these states that have basically kind of said, hey, we are restructuring the way we want to, legislate and potentially govern these kinds of companies?
Well, I think most of these states have requested information, right? They basically said, please give us information, explain to us what you're doing, and show us why what you're doing is legal, right? So that's, right. I haven't seen any state change their laws or enact new laws because of crypto. So we believe that everything we do is legal and is compliant. We continue to provide services in all these states. We haven't changed almost anything we do. And if any regulators asked us to change something or stop something, we will do it. I mean, we're not operating in the fringes or hiding or doing something offshore. Celsius, the U.S. company, and we provide the services to the U.S. customers. We provide services from the U.S. entity.
Alex, do you think that because we've talked to Congressman Emmer here a couple of times, he's been very pro crypto, and along with his task force, and he's very protective of the constituents, which are the customers of Celsius and many other companies out there. Do you feel that savvy legislators, are going to start really understanding what's happening in front of their eyes?
Yeah, so again, the enforcement action comes from a different part than, for example, your congressman or your local city hall councilman. I think there's obviously much education that we need to do to convince all these people that we're acting in the best interest of the citizens, of the residents of each state. And
Right.
when they dig into it, they will see that. So we are very confident that what Celsius does, what other companies do, complies with the laws, is good for the residents. We're not doing anything that takes advantage of them or puts them at high risk. And because again, I'm a very large user myself of Celsius, and obviously the largest user of Celsius, and I wouldn't be putting all of my coins into Celsius if I felt that it was a high risk offering.
I think a lot of what's happening right now with both the consumer side as well as what's happening at some of these legislative houses that are trying to figure out what is actually happening both in the DeFi space, obviously in the space that you guys are in terms of yields and lending. All of that's starting to transition now. This is a tall order for both the crypto industry and in general, the blockchain segment, to really kind of overcome what's happened and has been happening in the banking industry for really the past 4 decades. Do you feel like this is something, it feels to me like it's a David versus Goliath right now, the potential here to not take out, but at least become very competitive with the JP Morgans, the Wells Fargos of the world, Bank of America, et cetera. Eventually, they're going to figure out this is the model that they're going to need to adopt to just to be able to address a lot of these new age consumers in terms of both investing and all that. Is that a long time coming? Do you feel like you have a big fight uphill here, or do you feel like there's some big strides that have been made over here just in the last year?
Yeah, so one of the reasons Celsius is doing so well is because I've seen this movie before, right? So in the early 90s, I've built Voice of IP, created a company called Arbanet that basically brought Voice of IP to all kind of different carriers worldwide. And in the beginning, the carriers, just like the banks, ignored it and thought that this was like a niche play and that they will be able to overcome it through new regulation or through basically trying to stop us. And today, 100% of the companies in the world, phone companies in the world, are using Voice of IP. So when new technology shows up, you can try to build a dam and slow it down and hope that it's not going to overflow. But I think crypto is just like Voice of IP. It's money over IP, and it's going to flood the whole world, right? All the money in the world is going to migrate from traditional finance to this new finance, and the future is here, right? The future of fintech, the future of finance is here. The question is, are we going to leave the past behind, or are we going to try to drag us with us into the future, right? And companies like Celsius are the future, right? Where the customer is the center of everything, right? When you look at the most successful companies in the world, Amazon, Google, Apple, they all focus on the customer. Now tell me what bank you feel is focused on the customer.
Yeah. No, I think you're right. I think I'm all in on this model and have been for many years in the sense of kind of the evolution of where just the next generation of finance will come from. In the early, I guess in that transition stage, we saw a lot of online banking, a few companies that really started to go into true, branchless style banking, even though they weren't paying yields, definitely weren't doing the kind of crypto holding. However, we've seen some banks that have had, an initial movement. As I mentioned, the Vast Bank guys were on they've at least moved into the space of where you can deposit crypto assets within the platform. Obviously, they haven't made the jump to paying great yields yet, which could be the next step. Do you feel like there's an opportunity here for the banking system to kind of adopt this and truly kind of repopulate what the banking ecosystem looks like worldwide?
Well, look, Celsius is not here to eliminate the banks. I mean, this is not us versus them.
Right.
This is a race for the customer, right? The question is who is gonna basically collect the most customers. And when you look at companies like WhatsApp in the voice over IP world that have 2 billion customers, they are the largest phone company in the world, right? They're much bigger than AT&T or Verizon or anybody else. So the same thing goes with banks, right? Banks are going to have to start doing more for their customers, and the banks that understand that are going to move quicker and refocus on maintaining, retaining, and getting new customers. And the ones who sit in the back of the bus and don't want to join this trip and are complaining and are just, again, calling regulators and trying to fix this, are just going to lose all their customers. So you can decide you want to join this revolution or you want to ignore it, and again, I don't feel that traditional finance, I think because for the last 30 years, fintech has not been able to put a dent or put a scratch on any bank, because all the fintech companies, despite hundreds of billions of dollars of investment, had to rely on the same rails, on the same infrastructure,
right,
which made them use, like if you're PayPal, you're still using banks for settlement, for, as a toll collector in the middle, and so on and so on. But here we have a new system that completely bypasses this, just like the internet completely bypassed the TDM infrastructure that was built over 100 years. So again, this is a fight for all the money in the world, right? So obviously it's much, much bigger than even the entire internet. I keep explaining to people that, like this crypto thing is not some little thing. This is all the money in the world, right? So it touches every industry and every country and every person that lives on this planet. And so obviously the prize is huge. And, everybody, this is a fight over trust, right? Who is going to make the most trust deposits with customers, and who is not going to make any trust deposits with customers?
Yeah, for sure. Alex, so we've seen some success in El Salvador with Bukele and kind of the transition of what that country is trying to do. Obviously, that's going to open up some opportunities where they basically took a large percentage of their population did not have bank accounts. The banks were unable to penetrate that market. They open up the wallet, and all of a sudden they have a significant percentage of their population who are now moving in this direction. Do you see this as an opportunity for Celsius and many other companies to start to become the new bank systems of some of these emerging countries that are developing into utilizing cryptocurrency on a more, frequent basis? What are your thoughts there?
Yeah, so like you said, El Salvador, Ukraine, a few other countries are doing this. Again, they're trying to shake up their traditional banking system. I think in Salvador, it's $40 a month to have a bank account, right? So the bank monopoly,
Right.
through fees, effectively excluded more than half of the population. And here you have a system where anyone can open a wallet instantly without any paperwork or any requirements. Obviously, at Celsius, we do full KYC and AML, but I'm saying if you want to use MetaMask or any of these other wallets, you don't really need all that complexity that you have in the banking system. So I think, we're still kind of figuring out what that infrastructure looks like. Okay, if you're transacting with a central bank, you do need KYC. How is that integrated? So there's still questions to be asked. And look, I think the banks are like being squished like a panini sandwich. On one side, the CBDCs are squeezing them from the top, and you're seeing, like in China, for example, the Chinese central bank issuing digital currency. Today, 10% of the Chinese population, or almost 200 million people, have a digital wallet with a digital yuan. So that's kind of like squeezing from the top. And then from the bottom, you have crypto coming in and basically eating them alive, right? So that is a very difficult situation for traditional banks, and they have to decide, okay, what is our future? What does it look like? How do we evolve from being cooked in this panini toaster? You know?
Yeah, I see what you mean, and a good example of that for sure. Alex, let's jump to the markets. So markets are heating up. We've seen what is now being identified, and I think you even have called it in some of the conversations we've had in the past, is that you feel like Bitcoin really has a chance to top the 100K mark. It looks like the track is on with this bull run, moving in that direction, even though there are some that say we might see another small correction, but most likely it's going to be a short-term piece. What are your thoughts on where the market will be going, at least here by the end of this year, 2021?
Yeah, so again, we're adding tens of millions of users. I think we're at all-time record high at the speed at which new accounts are being created, new wallets, institutions, right adoption, corporate adoption, family office, all that stuff is all-time highs. So when you have limited supply and you have increasing demand, limited supply meaning 21 million Bitcoin, you will see higher prices. Now, it doesn't mean we're going to go in a straight line. There are going to be some correction. There's going to be some bad news. There's going to be some liquidations of people if there's too many, people going long, basically are leveraged long. But overall, prices are going to go higher over time, prices for Bitcoin and Ethereum. And I expect Bitcoin to be above 100,000 by the end of this year. I expect us to actually hit 140 to 160,000 in the first half of next year. And we will then correct. We'll have a correction to go again below 100,000, which will be this new 80 to 90,000 would be the new kind of support level. But all these things are good. Most people have no clue when to buy or sell, and you shouldn't be, right? You should be averaging in every week or once a month, taking whatever you can afford to lose, putting that into Bitcoin or Ethereum or stable coins and earning some yield on it and averaging in into this new asset class. So that's really the kind of, again, we don't provide investment advice, but that's what I do personally.
Yeah, no, it's good. A good point to make. I think the key here is when you look at leaders like yourself, you've seen this dance a few times in understanding these cycles. One of the questions I think a lot, at least of our viewers, we get so many comments and questions about this is, will this bull run? Is this particular cycle any different than the ones in the past, 2017, 13, et cetera? Do you feel like this could extend into next year? Do you think we'll see a major correction, or do you feel like, no, this is going to be, we're going to see another cycle where we see an all-time high, a blow off top, and then we're going to see a major correction down into the, whatever that number is, percentage-wise of where the new top would be? What are your thoughts on that?
Yeah, I thought we're going to basically see a blow off top before tax day, so before April 15th. But I think because of all of this China crackdown and kicking out all the mining companies, that forced a lot of Chinese who got scared to sell or move their Bitcoin or Ethereum to other platforms. So we kind of almost like got this a quarter or two of deferral, right? We went sideways instead of going up.
Right.
And because of that, looks like we're going to bleed into Q2 in this blow-off top that you're talking about. But again, I don't think for most people trading around this is very difficult. If you have a day job or you're spending time with family and you have a real life, you don't have time to watch a Bitcoin or Ethereum 24/7 and figure out when to press the buy button and when to press the sell button. That's why I think the best action for the average person is just to average in once a week is probably the best way. And again, hodl, earn yield with Celsius or other platforms, basically earn more coins. You should measure your success by how many coins did you end up with. And if you need to spend some dollars, take a loan against that asset, let the asset continue to appreciate, defer your taxes, take a loan, you want to spend the dollars because they're printing many more of those. They are not printing more Bitcoin.
Yeah, I love that. You always have those great snide remarks. I love those. Printing many more of the U.S. dollar for sure. So, Alex, let's jump to this, and that is, if you look at any kind of projects or any kind of blockchain initiatives around that's being utilized out there, is there anything that's really kind of raised or piqued your interest?
Yeah, so we've seen several waves with Bitcoin. Bitcoin is now 13 years old. The first main adoption wave was all about store of value. Bitcoin is a phenomenal store of value. The second wave was all about yield, and Celsius basically created or is leading that space. And now we're seeing basically additional waves that are, again, gaming, NFTs, other type of experiments. It's not clear yet how big or how wide the adoption is going to be on those. But we want to build as many floors to this building as possible. We already have a great foundation. We have a great first floor. Now let's build a tower of applications or use cases, because the more of these we have, the more people are going to join this revolution. And that's really, if more people join, that makes your coins more valuable. The winning here is about how many people are joining the party. Again, there is competition. CBDCs are competition for our solution, right? The corporate versions of like Facebook or like JP Morgan are competition for the open standards, decentralized, open ledger blockchain solution that we're working on. So we the people have to look at, okay, who's acting in our best interest? Who's doing good and doing well, and vote with our pockets to support those projects. If you're supporting some of those other projects, you are hurting yourself because you're not basically making sure that the crypto revolution wins this race.
Last question, Alex. Any plans for Celsius to be moving in? I know you guys have, you've dropped in several altcoins into the program. Are there any kind of plans in your roadmap to move into NFT or any of the NFT kind of, projects that are out there?
Yeah, so we currently support 45 different assets. That's 15 different blockchains. That's more than anybody else. And we do own NFTs. We're going to launch a product early next year as well. Again, we are supporters of everything that's happening in the economy, right? Our focus is on making sure that we always represent the best interest over our community first. We have one of the strongest community in crypto, and a lot of trust with the community. So we have to make sure that any project or any affiliation we have is with a good company that has the same principles, same backbone of basically doing the best they can for the customer.
For sure. Alex Mashinsky, CEO of Celsius, great to have you on the show again. Thanks so much for stopping in. We appreciate it.
Thanks, Paul.
Excellent. So you guys are listening in over on the podcast right now. Of course, give us some kudos over there. But the best thing you can do to catch these kind of interviews and a lot of our analysis is to jump over onto the YouTube channel and subscribe. And of course, make sure and hit the bell, because it's going to give you notifications of great stuff that we're putting out, including, interviews like this with Alex Mashinsky of Celsius. But also, you want to do something special, and that is hit the link below and join our Diamond Circle. It's one of the best things you can do out there in terms of just getting around a coalesced group of like-minded people. We're doing a ton of digital asset giveaways. We're also doing a ton of special content that's very specific for our Diamond Circle friends. And best of all, it's free. It's no charge to you guys. If you guys want to hit me up or have some comments, hit us in below. And of course, you can catch me on Twitter @Paul Barron. We'll catch you next time right here on TechPath.